Please welcome on stage Helima Croft, Managing Director and Global Head of Commodity Strategy, RBC Capital Markets. Kjetel Digre, Chief Executive Officer, Aker Solutions. Margaux, Head of Energy Transition Group, Trafigura. Alessandra Pasini, Co-Founder and President, Zhero and CEO, Zhero. Moderator, Naser Tibi, Senior Producer and Presenter, Arabiya.
Good morning. Thank you. Thank you all for the warm welcome. So, welcome to today's panel on strategies for scaling energy infrastructure. The global energy landscape is at a turning point. We all recognize the urgency of decarbonization, but the path forward is anything but simple. The transition timelines we're working with are ambitious, yet the challenges remain substantial, from regulatory uncertainty to financial and geopolitical risks. Today, we will explore 5 questions shaping the future of energy infrastructure. 1, timelines for the energy transition. How quickly can we realistically scale up? Are we aligned on what is possible for the next 5, 10, 20 years? 2, regulatory and policy uncertainty. Governments play a crucial role in setting the rules, but shifting regulations create uncertainty for investors and developers. So how do we move forward in this evolving landscape? 3, leveraging existing infrastructure versus building new, right? So should we decarbonize repurposing current infrastructure, for example, retrofitting gas pipelines for hydrogen, or is it better to invest entirely in new systems? 4, financial and geostrategic risks, from supply chain disruptions to shifting energy markets. How do we mitigate risks while maintaining economic viability? 5, and lastly, technology scale-up. While multiple options are there, hydrogen, nuclear, renewables, carbon capture, how do we prioritize which technology to scale up? Our expert panel today will unpack these issues for us, and I will start and dive in immediately with Alessandra. Do you get a sense, Alessandra, that the whole discussion about the transition has matured lately in the past few years into something more, more of a practical conversation, you think?
Thank you. I think we are getting, hopefully, to a more pragmatic conversation, and I think the targets, the big, ambitious targets have been set. They've been clearly in a hype we've gone through, and at the same time we're going through this hype, we were going through increased financing costs, increased inflation, so the environment wasn't conducive to really scale up projects. But I think we're now at a point where on one side, on the positive side, there is a clear evidence of the need for more power, which means the importance of grid is now evident to everybody, and that's a non-regret move that we need to tackle. Storage and the importance of storage, again, goes hand in hand, and this is thanks to the data center and AI growth. And this is a new opportunity which is much more visible than it was maybe 2 or 3 years ago. On the contrary, when we think about green molecules, indeed, the market is more selective, but in a way, if we were to use a financial jargon, flight to quality is what really matters now, and pragmatism. And I think the market is getting to the point where they realize that it's not one solution that fits all the needs. We will need everything, and being and remaining neutral on technology will be a fundamental step that we need to go through. And the second thing that I believe is also very important is, and has emerged over the past couple of years, the dichotomy between the global north and the global south. And this, I think, is introducing a new way of looking at where to develop at-scale project, because we need at-scale project to drive down cost. And the partnership and the relationship with Global South will be very important, particularly if we start from a position like Europe, which is just sitting next to a very important continent when it comes to renewable resources like Africa.
Margaux, while the net zero endgame is essential for the planet, getting there and the road there matters as much as well, if not more. How can we describe this imbalance between, the short-term, medium-term, and that long-term end game? And how does that impact policymaking when we're thinking about scaling energy infrastructure?
Thank you, and thanks for having me. And it's been such a great couple of days. I've been really, really happy about the experience so far. And just to bounce off maybe what Alessandra started with, I think the last couple of years when we talk about the energy transition, it's been very much focused on endgame and what our society needs to look like in 2050. But in reality, I think we need to be really starting to look at decarbonization as a spectrum. What are the incremental decarbonization innovations and technologies that we can deploy now, rather than waiting until 2049 to deploy what we really need to see in that time? Unfortunately, when we talk about things like hydrogen and ammonia and low carbon fuels in general, this does require a lot of infrastructure shift and obviously a lot of cost implications around that. But there are incremental steps that we can achieve today, which will have a very meaningful impact. We're at a natural gas conference right now. Let's talk about methane, right? I'm an investor, and so I look at a lot of different companies that are deploying new technologies that are going to help with the energy transition, and I am kind of gobsmacked at how little attention methane is getting, methane abatement. We've gotten really good at looking at different solutions for measuring and visualizing what are the methane emissions along the supply chain, but when it actually comes to abatement technologies, they're really underinvested. And this is not just an oil and gas problem, right? If we think about what we've heard over the last couple of days in terms of data centers and the rise of AI and the challenges with power grid constraints and whatnot, gas is likely to be here for the foreseeable, right? And if we want this to be a tool for decarbonizing, we need to think about abated natural gas, and that goes through methane. So decarbonization on a spectrum is really what we're trying to push for.
Okay, we'll probably delve more deeper into that spectrum aspect of the transition. Kjetel, are some regional ambitions when it comes to the transition unrealistic or out of touch with reality? And I want you here to touch upon the European ambition on that front, and especially given the high level of uncertainty that persists today, how should we go about getting and aligning everyone from developers, governments, suppliers, aligned on the proper transition and its timelines?
Brutal force. No, I'm just joking. Perhaps start with a reference to the question you had to Alessandra, because being predominantly Norwegian, but then also working in Europe, 2020 for us was where the pendulum swung all the way over to green. And as a company, we had a strategy of being in the whole energy mix. So back to ambitions, back to the sort of the realistic view on everything. I feel that the shrinking ambitions on behalf of the greener initiatives and energy verticals has been quite healthy, but we have to make sure it doesn't go all the way over to the other end, because it needs to happen, and it's still a lot of work out there. But then to Europe, we will be one of the players that solve offshore wind for Europe and Norway, and we have a certain capacity. If you look at the European ambitions, you can translate that for offshore wind to 1,000 foundations, floating and bottom fixed, 1,000. Norwegian ambitions, 100. We, as the biggest Norwegian company in this segment, we did 11 in 2.5 years. So there's something about the capacity that sits with the industry that is not there at all. And then to what we have to do to fix that, because the key is collaboration between the government, developers, and suppliers like us. And it starts with the model being broken. We have to, for these projects, project finance and make them bankable. As soon as you have started thinking about the idea of a project, they are looking around for how to do that. And then risk is the key issue. Lenders need to de-risk, and developers, what they do is to take this glowing cannonball and throw it down the supply chain. And that's not a good start of a project. So that needs to be solved. The other thing is that we as suppliers, we shout for give us the projects and give us the money, and so we are sort of a bit in the sort of a complaining mode. I think that we have to look at what we have behind us, decades of oil and gas and other projects, and start truly becoming more efficient, improving ourselves as well. The third big thing In Norway, we have a government that are subsidizing. Subsidies, piloting is not necessarily the best words for everybody, but actually having a government that, particularly within CCS and hydrogen, are funding so that you can sort of lift true value chains and then start getting spin-off projects in the different segments of that value chain. It happens in Norway on CCS and then potentially hydrogen. And that could also trigger necessary technology development. And also, as I said, investments into the sort of capacity that we have going. And then the timetable, one big problem for the likes of us, we need pipeline opportunities, see that it's robust enough to start investing our own money into capacity and competence. And then everything get postponed and changes. That is obviously something that we also need to fix. It's enough work out there, but we need to have a predictability in all of it. Last thing, all of the above is really, describing elements of that us being in a huge transition. And I think that this is an intermediate period where we need to sort of perhaps have some temporary solutions to how we mobilize the whole industry cluster, shift from oil and gas over to these new areas, create sort of new definitions of roles and the governance around it. So it's a temporary phase, needs some temporary initiatives and contributions, and make sure that we lift the whole industry, lift the whole cluster, lift the whole market, rather than creating just a few winners that will dominate the next 2 to 3 years.
And I think this touches upon what Margaux just spoke of, balancing that short-term and the long-term end of the transition. Helima, the landscape in DC has shifted, to say the least. To say the least, with the advent of the new Trump administration. Let's focus on one part of the energy policy there. Do you think the IRA will survive Trump 2.0? Keeping in mind that many red states benefit from the IRA, so will their senators and congressmen and women vote it out in Congress? What do you think?
Well, first of all, I want to thank Lorenzo for hosting us again at this fantastic conference. Thank you, Naser, for moderating this fantastic panel. When it comes to the IRA, I mean, the landscape in Washington has fundamentally shifted. And if you look at the IRA, while parts of it may remain, certainly any funds that have not been allocated are not going to be allocated probably for the designated projects. Big questions about will there be actual freezes on existing funding. Clearly, certain technologies have fallen significantly out of favor. I would put wind at the top of the list, but even solar. And what is remarkable, if we think about the difference from 4 years ago, is the Biden administration came in very focused on accelerating the energy transition. First, one of the first acts was to go back into the Paris Climate Accords, to announce a pause on drilling, on federal lands for oil and gas. And we're now seeing an absolute inversion of that. One of the first acts is to leave the Paris Climate Accords. We now have a pause on, projects related to wind and solar on federal lands, while at the same time we are opening up drilling on federal lands for oil and gas. So I think it's, you can't overstate the sort of sea change in Washington. I also think that the IRA politically became part of the culture wars. It became something that was very much an emotional issue on the campaign. And so now the question is, what will remain? And you did bring up the fact that there were a lot of emphasis and policymakers about the IRA saying, well, we are future-proofing it because the beneficiaries are in red states, as you pointed out. But again, everything we've seen so far on wind and solar would indicate that that is not a bulwark against some dismantling. Now, the question is, what are the technologies that have more bipartisan appeal? And I would say CCUS certainly has broad bipartisan support. I would say nuclear has broad bipartisan support. Geothermal is another, technology that has broad bipartisan support. So you should look for technologies that have this sort of basis of support that I think will continue to receive, funding, will continue to receive support. But beyond that, again, if you think about, subsidies for electric vehicles, that's out. The regulatory landscape is really shifting, and so I think it's very hard to overstate, the degree of change in Washington around the IRA and the broader climate agenda.
Well, you've mentioned the word subsidies, and here, Alessandra, I want to come back to you, because what do you think we really need to get the ball rolling on the clean energy projects from a regulatory perspective? Is it more subsidies? Is that the key word? And more importantly, how can we probably leverage today's infrastructure over the short to medium term to mobilize and accelerate the transition?
Look, I think just linking to what my fellow panelists have just said, I don't think that subsidies is the solution. I think the overall market environment is much more complex. You need to address permitting. You need to remember that any project needs to coexist with local communities. And so what is in there for them is something we can't leave behind us. And importantly, Europe in particular is at the juncture where energy costs twice as much as the US. There is a fundamental challenge on industrial production competitiveness. So I'm not of the view that pure subsidies will address all of this, because Europe as a continent and each individual state is in a different fiscal position today. And I think we also need to be very focused on action that gives some more visibility and certainty that we deliver and address part of the issue. And on the molecule side, what we think would make sense is mandate. So put small little percentages, whether it is ENG with LNG, whether it is green ammonia with gray ammonia, whether it is methanol, clean and fossil, because that is a way that through diluting on a per unit basis, the extra cost will help, that will create a link that is more financially efficient between supply and demand, and get a little bit outside from this dilemma of who is going to move first. And developers need to do their job. We need to be good in developing projects that are as competitive and as tight on cost as we can, and be credible, because we need to do that in order to then attract the rest of the funding that will develop. And if we as a developer are not successful or credible, even with mandates, there will not be a scale up in the industry. And I think this is really what I think it's important. When it comes to the electrification side, because again, transition is not just molecules, but it's also electrification side, leveraging existing infrastructure in particular is going to be very, very important. So there are places where the grid is strong. Just leverage that and bring more power into the grid. And that's what we are doing with our project. We land in a place where we can dispatch 2 gigawatt more in one single entry point into European grid. And from that, we can dispatch power in Italy and in Germany or in Austria. It's a small example of what I mean. Repurposing pipeline is clearly part of the solution, but if you go for ENG, you probably can save some money and avoid that effort. So I think we just need to be more comprehensive in the solution and more pragmatic, and look at the lever cost of the clean energy, whether it's green or whatever evolution of clean energy we are talking about, rather than the pure production cost. This is going to be important, because that's where leveraging existing infrastructure will come into the math and will be valorized.
Very interesting. Margaux, you mentioned that decarbonization is a spectrum, and as you put it, so I want you to expand on that point, and why do you think it matters in terms of the approach or the perspective in helping us shape, a progressive transition that can bend the arc on that emissions in the next couple of decades?
So we're commodities traders. So most of the products that we trade on a day-to-day basis are very, very large volumes, extremely liquid markets with good forward pricing curves. And so as a trader, we are obviously looking for the same thing in the energy transition. So something that we talk a lot about with our stakeholders is a shift towards carbon intensity, standardization around the impact of the technologies and the projects that we are developing. So, in the past, and regarding hydrogen, there was a whole rainbow of colors, and I don't know about you, but I sometimes get confused between the difference of pink hydrogen and yellow hydrogen. And
What's your favorite color, though?
That's the one you get stuck on usually, right? And it creates these super nonsensical, dogmatic discussions, right? Because all of a sudden you have one part of the panel that's like, I want blue all the way, and then the other one's like, no, I want green. And then, ultimately we all agree that you need all of the above. The challenge with the colors as well is it kind of lacks depth when you talk about impact or emission abatement, right? We recently spoke to a developer, for example, that was trying to sell low-carbon methanol. And they were like, yes, it's the gray methanol benchmark, and we're actually doing carbon capture, so we're able to achieve a 70% emission reduction versus gray. And we were having conversations about what actually the technology is and what is the feedstock that they're using, and we're discovering that it's coal-based, right? And so I don't know about you, but coal-based methanol to me is probably not gray. It's brown or black or something else, and it has a very different carbon intensity compared to gray methanol, right? And we can debate exactly what that level is, but most of the players that we speak to are saying something like 95 grams of CO2 equivalent per megajoule. If we're talking about coal-based methanol, that stuff is like 100, 120 grams of CO2 equivalent per megajoule. So when you're talking about a 70% emission reduction versus coal versus gray, that has a very different NCI score, right? So I am very, very big proponent for shifting towards carbon intensity to numbers. Like, we can agree what unit we want to be using, but grams of CO2 equivalent per megajoule is a great way of benchmarking different technologies, different fuels, different options. And ultimately, as traders, we are given a spec sheet for the things that we transport and that we trade, and carbon intensity is just going to be an additional line that you add on top, right? And if by 2050, we want consumers to be able to say, hey, the stuff I took in the supermarket has got a carbon footprint of this. Well, we need to move upstream, right? We need to talk to people like us that are trading 6-7 million barrels per day and understand what the carbon intensity of all this stuff that we're transporting is going to translate into what you get into the supermarket.
Kjetel, on the other spectrum of the renewable companies that have been stuck into a hole of big losses in the past couple of years, what do you think is the path forward for that sector and digging themselves out of that hole?
Well, the developers, the suppliers, the sub-suppliers all have lost money, so it's the whole sort of cluster of companies that have tried to play it. Back to the first question, I think we've now done the first-offs in very many of the energy verticals and learning. And then if we start by removing this broken model thing that I explained, and also look at how to make sure that we take on the task of improving. Many of us started in oil and gas, and we are still there. In oil and gas, we have been super good at finding new solutions and adding requirements. We are super poor at removing. So we have come to a level where perhaps a core of the industry and the competence has gone too far and become too bureaucratic, too much waste in the way that we are operating. So that's the next big topic in my mind, that we are coming from oil and gas developers and suppliers. And these sort of different ways of doing things in the energy verticals, they tend to then pollute each other. So when we are running CCS projects, for instance, on the capture side, we actually have examples where we have designed stair towers that is going to be on the ground in the benign southern part of Norway, perhaps never being used, because they have an elevator on the side. Extremely low risk, but that stair tower can survive on a floating FPSO in the Barents Sea. So making sure that we are defining new versions of ourselves, the different companies, and how we collaborate to avoid gold plating is important. And then there's something about, and that is a known story, again from wind, we have to stabilize before we change and increase sizes. For instance, turbines is that kind of example. We lose control as soon as we stop standardizing and copying and start changing. That is a huge risk in itself.
Because we know we have a lot of floating wind technologies without a particular standardization of a particular model.
Yeah.
Right?
So sizes is one thing, turbines being pushed by developers and they want to take out the economy of that, then they add on a lot of risk for themselves and the suppliers. And as you say, we sort of compete head to head. If you have a quayside in offshore wind in the northern part of Europe, you want to sort of create business around it in wind, and then we're really sort of looking for how to compete and perhaps drive it. We are competing to the sort of rock bottom almost. And then I mentioned standardization, and I think that's what you allude to. We have to find out where we don't have to or should compete, because we are all creating specific solutions and hope that the technology edge is what sort of wins us the place at the table.
Yeah.
But we should try to standardize, think Lego and reuse and copy, and find areas where we don't want to compete. Another way of thinking collaboration is, take North Sea. If you are in sort of rounds of application in Scotland, in Norway, in Denmark, you put in some investments in some capacity, let's say cable factory, but you shouldn't and couldn't have cable factories all over. So we need to look for sort of regional collaboration solutions as well. And I think that is an example where we want to take down the barriers. And one version of taking down barriers is also how we collaborate. You're a developer, I'm a supplier, you are a subcontractor to me. How do you look for win-win and alliances rather than having the classical sort of hierarchy in jobs that we perform together? Because there's a lot of waste, there's a lot of unneeded work in that setting. My last point is to understand digital AI, robotics, and not only sort of digitalize the analog version of ourselves, but redefine how we're doing things. If we are designing platforms for wind and oil and gas and everything, and if you do it for unmanned purposes, we have to sort of zoom out and cannibalize all our thinking. If humans are not going to be there, you can have a hazardous environment, which is hazardous only for humans, but not for the robots of the world. So there's a long list. I don't have it all, but we need to challenge ourselves at the core, at least.
Yeah. Helima, demand outlooks today shape future investments, right? So analysts were expecting softer oil prices for 2025, and here we are. We were at $82 at the beginning of the year, and oil demand outlook seems to have been extended.
Yes.
Outwards compared to the more bearish expectations a couple of years ago, whereas gas is setting itself up to be a destination fuels, definitely. We've seen Trump has scrapped the Biden's LNG moratorium.
Yes.
We see now that LNG receiving terminals in Europe today are a permanent fixture. So will Trump be able to produce or to induce US producers to drill baby drill
yes.
when there's a talk of a structural, demand shift in Chinese demand? How do you see these recent developments in oil and gas shaping the future of the energy infrastructure once again?
Well, I think that this is the challenge for President Trump. Can you do everything everywhere all at once? And so he's laid out this very ambitious agenda on the return of American energy dominance, wanting prolific growth of US oil and gas production, but also wanting $50 oil. And so the question is the price point that he was initially seeking, is that compatible with explosive growth in the industry? And what we've seen so far, indications are from the shale companies, is that they do want to retain capital discipline, that they do want to remain answerable to shareholders. They want to be thoughtful about how they invest in the resource. And so it's not a return to the sort of quest for growth stage that we saw initially, in 2012, 2013, 2014. And so I do think that, the United States, while it's going to have a more permissive regulatory environment for oil and gas, the question is that enough to reach these targets that President Trump is seeking? And I do think the fact that he's pivoted quite quickly to asking OPEC for more oil is an acknowledgement that the United States can't turn on production like a light switch. So hence the appeal to the OPEC, to Saudi Arabia to increase output. And as you know, though, these countries themselves are saying, like, look, we have a production agreement. We have worked hard for this agreement. We have better compliance. It's not necessarily in our interest to abrogate this agreement to respond to the policy priorities of Washington. So I do think that's going to be a very interesting back and forth to see how President Trump manages domestic producers, foreign producers, in his quest for lower energy prices, but higher levels of energy production out of the United States. Gas is back, though, and that was something that initially with the Biden administration, we did not know where gas was going to land. We didn't know whether it would have a seat at the table in terms of acceptable energy transition fuels. Certainly Europe, that was a big question mark when gas was not in the green taxonomy. And I think the Russian invasion of Ukraine really settled that issue. But then we had the pause in LNG permitting that you brought up, questions about, was this just a temporary return for gas? President Trump has made it clear with one of his first acts, lifting the permitting pause, that gas is back. I think one of the very interesting questions, though, for gas is going to be, who's going to be in the mix? And will we see a potential return of Russian molecules to Europe?
That's a big question
That's
now,
the big
right?
question.
Yep.
And I think that's a big question, frankly, for U.S. producers as they look at the market in Europe. Is there going to be a potential switch in policy in Europe where Europe says, look, we face deindustrialization challenges potentially around the energy crisis. Do we need to go back to lower cost pipeline Russian gas? I think that is going to be a very important policy question that we need to be paying close attention to.
Margaux, when it comes to technologies and the potential technologies out there, at this stage of the game, should we by now know what technologies to, really invest, decide upon which ones to invest and scale up, or should we remain technology agnostic and just let the markets with time to choose a winner?
Well, it's a very leading question there. I think we've all been advocating for a portfolio of solutions, for understanding how the technologies are going to mature before being able to make the choice, to understanding the implications on infrastructure and energy procurement and all these different things. I would love to be able to challenge my esteemed panel and the esteemed audience to start making choices on technologies, because I worry that this approach to portfolio solutions is becoming synonymous of inaction, right? And we've been in this industry long enough. We understand the energy transition. We now know what it takes. We understand the implications. I would love to be able to see industry, region, and time-specific hierarchies of solutions so that we can start making choices. As a commodities trader, we transport a lot of our products and goods through shipping. And so a big part of our DNA is fundamentally being a ship charterer. We do something like 5,000 voyages every year, right? And when we look at shipping, obviously a lot of the infrastructure and the vessels themselves, when you make a choice on engine technology and fuel propulsion, you're going to have to live with that choice for 30 to 50 years. So the choices we're making now are going to have an impact on what we see in 2050, right? We cannot afford to wait and see. I also don't, I'd love for us to avoid spraying and praying and going after multiple different technologies in shipping and just waiting to see how it'll materialize. Because if we're all doing that, then none of this will happen, right? And so taking the example of shipping, for example, we're talking about LNG, we're talking about biofuels, we're talking about ammonia, we're talking about methanol. I hope that we are not allocating 25% of our funding to biofuels, 20% to LNG, 25% to ammonia and methanol. I think that we need to be allocating more funding to the near-term solutions, which clearly are very much LNG-focused, by the way, especially around Europe, and then prepare for the next generation of fuels that we will be able to use, which will be the likes of ammonia and methanol. But as an industry, we now need to come together. We shouldn't necessarily leave this to policymakers. We should come together and decide which technologies we want to be pursuing. And so this is my challenge for 2025.
Alessandra, of course, all of this needs financing, and one of the channels of financing is multi-development banks, specifically when it comes to clean energy projects in emerging countries and in LDCs. You, as a developer of clean and green energy projects, why do you think the impact of such organization have been so lacking in the last few years?
I think it's a function of not a lot of political will to develop clean energy project on one side and not credible project on the other. So I wouldn't put all the burden on the multilaterals. We see a shifting gears and the way they look at things. They clearly can do more than what they've done to date. It goes back again to put in front of them credible projects at the right time and not just have the expectation that they can come and put capital back in projects which are not credible. Being more specific, on one side, if we talk about the Global South, believe, and that's something we've been advocating by speaking with multilaterals, that if they were to put very little capital behind development of projects, although it is clearly a capital that has a high degree of risk, it can really have an impact which is has a multiplier effect for some of these countries. Always, as I said before, it will be important, though, that projects have a strong local content in order to justify in their eyes the importance and the need to support and back the project. And this is not just hire local employees and local tax revenues. This goes beyond, and for certain countries in Africa, is leave power for local consumption. There is a massive need and energy poverty in Africa, and that's what the World Bank and African Development Bank have come out last week with a target by 2030 of give access to energy to 300 million individuals in Africa out of 700 million which we don't have access. So that's one clear example, but they also need to evolve, and I think we see some of them doing this in understanding and being able to evaluate project, because ultimately, as a developer, we develop project that needs to face and address risks. And understand these risks and address these risks is our job. And we need to bring them along and understand how the degree of risk is going down as the project develops. On the flip side, if I look at Europe, Europe has been promoting a different degree of partnership with the Mediterranean. There is a program that is called TMED, which goes not just on energy, it's just in general, a general way of Europe looking at Africa in a cooperative manner rather than a supply and demand type of relationship. And that brings some of the multilaterals coming from Europe, so EIB and EBRD, to the table. And this is going to be important to support projects like ours, which is connecting Africa to Europe with an electric interconnectors. The last thing that I believe will be an important goal, which I haven't seen yet mobilized from multilaterals, and again, thinking about European industrial landscape, is trying to provoke some of this money to go behind scaling up manufacturing capabilities for equipment that are key for the transition. So we've seen the Siemens and some of the other players scaling up their production capacity when it comes to conversion station and things and cabling for others. But there is more that can be done. And of course, as a private investor and a private player in the market, you need the backlog to go along with manufacturing capabilities. But this is slowing down the pace in certain part of the development of the transition, particularly around electrification. And we see a role for multilaterals capital to play into this in order to bridge some of what otherwise would be a profit gap vision by the manufacturers in a space that is going to be essential for the transition given the electrification trend that we all see.
Helima, staying on the financing aspect here, there's another side of the coin when we're talking about higher oil and gas revenues for hydrocarbon exporters, such as the countries in the Arabian Gulf, is that these countries are on a spending spree globally when it comes to funding clean energy projects as they try to diversify their economies and stabilize their hydrocarbons revenues. So how do you view the growing role of this group of countries in funding clean energy projects globally, and particularly in emerging countries?
I mean, this is such an important point, and I think really the Gulf countries are really doing the all of the above. Like, they are literally taken on the Obama mantle of all of the above. And remember, for years, we had these Gulf countries saying we need to be pragmatic, we can't pick colors when it comes to hydrogen, we need to invest in the traditionals, fossil fuels, but also make massive investments in the technologies of tomorrow. And I do think it's going to be a critical role when we talk about financing that the Gulf sovereign wealth funds will play in that. But also beyond just the financing, the partnerships with countries, for example, in sub-Saharan Africa. We were both at the Future Minerals Forum, and the type of partnerships that they are looking to do with African nations around securing supply chains, but the partnering up of saying, like, okay, we will work with the DRC, and then we will have processing in Saudi Arabia, like creating entirely new supply chains, I think is going to be fascinating. And I think that they have a leadership role to play in many of these countries who for years were saying you were leaving us out of the transition conversation. You were telling us we can't invest in the natural resources that we have in this country. We have energy poverty. You're not addressing these needs. So I do think that the Gulf countries will play an important role in terms of bringing sub-Saharan Africa along when it comes for investment in the new technologies. The partnership, I think, will be key.
Well, great. I'm afraid that's all the time we have. Thank you so much for a great, insightful session on how to scale up the future energy infrastructure. A round of applause for the panelists, please.
Yes, so, yes.